In this video, we're going to dive into our latest market update for Tucson through December of 2022. Stay tuned, it's Steve Dooley. Okay, let's dive into the stats in December really quick. Just going to preface this, but there hasn't been a whole lot of changes. If you've been keeping up with my videos, there wasn't a lot of changes from November to December, but let's dive in and get you updated anyway. So as we look at the trends here, we're going to see that the prices are steadily increasing. However, it is starting to slow down and level off a little bit. So, October 362, 365 in November, and now we're sitting at 366, which is your average single family home price here in the Tucson market. So let's move on from there and look at the inventory. The inventory is increasing, so that also contributes to like a slowdown in the entire market, and it puts more leverage back to the buyers, which is something we had been lacking for the last 2 years. It was actually really crazy, facing 10 offers on every deal. But now buyers actually have some time to actually sit and think about it, choose the right house, and even better, there's lots of houses to choose from. So you can actually find that really perfect house and take your time doing it a little bit as a buyer. Now, the inventory is steadily rising. We're sitting at 2,300 homes. These are single family homes, not total homes. So we're getting more towards an even market on that. Also going to look at this other stat here, days on market. Correlates to homes for sale. So as inventory goes up, homes sit on the market longer, right? So it says 9 here. That number's kind of skewed, I believe. I've seen houses on average sitting around 30 days. If the house is really cherry and really like just decked out and is priced extremely well or even low, then you can get it sold in like less than 2 weeks. But right now, average, I would say more like 30 days just from experience. So I'm not sure how these numbers correlated into that, but that's what it is. It's showing 9 days. As a seller, you can expect your house to sit on the market more than 9 days. I would say that would be very safe to say. And again, months of supply, this is the number that also correlates with the days on market and the number of homes for sale. As the number of homes for sale and the supply increases, then you're going to have more inventory. So this number is 1.7 months, which means it would take 1.7 months to sell all the houses that are on the market today. So that's kind of where that's looking at. Percent list price. Just going to touch on this because I believe this is like it's a true stat, but you have to take it with some context. So contextually, it's not true. So what's happening right now a lot is sellers are getting their houses sold. They're getting asking offer prices. So people are putting in asking offers. As a buyer, you can put in an asking offer, but then you can also expect to receive up to 6% in seller concessions towards your closing costs and to help buy down the rates. So that's what's happening. That's the trend in the market right now here in Tucson is my client can put in a full price offer on a house and then get 6% in seller concessions to buy down their rate, 1 to 3% of interest points. So 6%, and if you figure on a $400,000 house, it could be upwards of 15 to 20,000. So the stat says 100%, but in reality, the sellers aren't walking away with all that money. So as a seller, just know that when you put your house on the market, you can expect to be asked to pay for some concessions and do some repair work. That's kind of the standard practice right now. And price per square foot, again, it's leveling off just like the price of the homes. It's sitting at $211 per square foot on a single family. And then, of course, we've seen other listings out there that are lower. So that is leveling off, but that's just a basic price per square foot on your property, not necessarily correlating to the actual value. Okay, so what's happening as we move into January and into the rest of 2023 with our market here? What can we expect? Well, the first thing is Let's look at the history. Let's look what happened last year. Last year, the Fed met 7 times, and every time they have increased the interest rates. So they did it right in the beginning of it was like the 14th of December. I think they bumped it up by 0.5%, 0.5%. I'm going to put a link to the USAA Today article I found that has just those numbers. It also has the schedule of when the Fed is meeting, so we can keep eyes on that, right? Because that's important. When they meet here, they're meeting next at the end of January, so it'll be very important for us to keep an eye on that, because what's going to happen there, if they raise the rate again, we can expect that to affect our market as well. And same with if they lower the rate, then we can expect buyers, more buyers to get engaged and want to buy houses. So demand is still there. It's not as high. The market is slower than it was clearly like in the beginning of last year. But as we move through, the year of 2023, we can definitely expect a slower market than it was. We can also expect more leverage towards the buyers moving through 2023. And sellers can expect to have to actually do some of the work. They can't just like throw their houses up on the market, mark it up 20 grand and sell it. It's not happening that way right now. It's back to more of an even market. Sellers have to do deferred maintenance. They are going to be getting asked to pay for concessions. They're going to be expected to do repair work when the home inspections are done and things like that, because the leverage is and the market is moving back towards the buyers right now. So that's kind of where we're at with everything, and just a kind of a snapshot of what January is looking like. We'll look at the Fed, see what they do, and nobody has a crystal ball from there, but I will keep you posted and updated as we move through this year. And I thank you again for watching. Be sure to watch another video on our channel and like and subscribe. Thank you.